Good afternoon. Hold on. I think there we go. I think streaming. Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Thursday, May 2nd. Really nice, I would say better price action for the day. Still whippy, crazy whippy price action. Just to kind of summarize the day really quickly, really fast. And by the way, thank you for joining me for the live stream of today's market recap. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer there. But yeah, I mean, one of the things, I know this is not the theme of the day, but maybe something for you to write down. But what what I've been noticing in the last couple of months is when the market is just really hot, like right out of the gate at 9:30 in the morning, from 9:30 to 9:40. If you see that tick index, tick index, and you can monitor this in several different places, but when it starts to go above 1,000, it's usually like the market usually gets faded, and there's nothing that's guaranteed, but you could just kind of watch that develop like in the first half hour of the day. How is that important to your trading? Well, if you're looking to establish some longs, it means, don't chase that first 5-minute bar. Let things settle in a little bit. And yeah, so you don't want to see things like, and I think today got to like a plus 1,300 or something like that tick. But in any event, just to kind of walk through how the day progressed. Of course, a lot of earnings reports after the close. I'm getting a bit more excited that earnings season is coming to a close, because there's just a lot of information that comes at you. So I did not play Apple. I really don't play Apple for earnings, because there's just not enough juice in the name. But of course, I'm always interested to see how it responded. And I'll go back to like what I kind of went over earlier in the week, or I guess it was last week, with Tesla, and just talking about like where the stock has been over the last 3 months, over the last quarter. If it's really gotten beaten up, it's a lower bar to jump over. And that was the case for Tesla, right? And it was the case that it was so washed out. Anything positive that was mentioned on the conference call was going to get the stock to move a bit. And it's kind of like the same thing with Apple. This buyback, regardless of like their results. What I think is kind of one of the most interesting things is this buyback program, right? So they're going to be buying back shares like just ridiculously. So how are you going to get in the face of that in terms of a short seller? And this is I believe it is the largest buyback program ever announced. That's $110 billion of shares. So like above all, and if you're not familiar with what a buyback program is, they're buying back shares in the open market. So if you're looking to kind of go against that when they're actively buying back, now we don't know when they're going to be buying back, they have to do it in open windows and so forth. And, they do kind of probably pick their spots and so forth. But that's a lot. And that could be why it's reacting this way. But I just wanted to show you this weekly chart, because it had already sold off. So again, you have to think about what's priced into the stock, and that's the case for any earnings report, right? If it's already up a lot, right? The same thing with Meta. Meta and Netflix, like I don't think they turned in horrible quarters, but the stock was up huge from the last quarter. So there's already a lot of good news priced in. And here's where the stock was sitting. And we could kind of see where this thing's up. Yeah, I mean, that's a decent move for Apple. I mean, Apple, just so that you could see that I'm not making this up, but Apple doesn't really normally move more than a few percent, right? Over the last 10 quarters. You had a 7% in there too, which is kind of an outlier. You had a -5% in here, but it just doesn't move. Look at the last 10 quarters. All right, it doesn't move that much. All right, let's talk about where we finished up in the S&P. If you've been watching my end of day videos, you know that I really pay attention to some of the short-term levels in the S&P and the Qs when we're trying to like basically figure out a direction, because often you'll get those signals first. So let's look at where we are for the daily chart. So there's been two levels that I've really been talking about over the last couple of days. Right. And that's the bottom, since we have a new value area for the month of May. right? And I had this question on Twitter, which was a good question, by the way. By the way, I can't see your questions, but if you guys like these end of day recaps, please like give this a like, and then maybe I'll continue to do some more of them. But the level that I was watching was this 50, was it 50? I can't read this, 50.92, just to see if we would close inside the value area. So that's a good first step. It's also nice to see us get back above the 5-period moving average, right? That's always what you want to see begin to happen, right? The other thing to kind of note here is that we made a higher low, which is also, from a technical standpoint, something good. Now, we're not out of the woods yet. You still have to get through the 50-day moving average, because I think that, just as a general trading rule, to be more conservative when the indices are below the 50-day moving average. But I mean, that was a crazy move in the last hour of the day. But one of the things that I said in yesterday's video was, I said, like, a small silver lining is that sometimes it takes a day for market participants to really think about what was said, and it's sometimes that day after the Fed meeting is more important than the day and the whipsaw that happens. So we're progressing, which is which is good. It's a little bit of a slower move than we saw yesterday, but still, nice to see the market actually close on the highs. That's something that we haven't really seen for a while. So I view this day as constructive. I think that we're going to need to see a lot more things happen. Here's the Qs, which are basically back to you could call it the scene of the crime, where they failed yesterday, close to that top of value. So we'll look at NASDAQ futures, because they're not going to it's not going to update on the daily chart of the Qs, but let's just see where this is trading. Yeah, I mean, this is trying to get into the value area, right? So again, the value area for May is based on all of last month's price activity. This volume profile that's in the background there, right? By the way, heck of a VPOC takeout there, and on NASDAQ futures. I watch more. Some people watch the futures. For the NASDAQ 100, I pay attention to the Qs, but yeah, that's not a bad reversal there on that. Wow, that really marked the low. Interesting. So yeah, getting back into the value where I think good. I still think, so if you look at, and I've been breaking this down, this is something new that I've been doing in terms of like a sector snapshot, right? And you could kind of see what's going on here. So again, so this is super short term, because I'm just looking at the 5-period, the 20-day, and the 50-day moving average, right? And just very simply, the definition is, if price is below the 5, the 20, and the 50, that means right now the price is weak. Once you begin to regain the 5, 10, and the 20 moving averages, again, those are all short-term moving averages, label this with strength. So the only thing that we have right now with strength is really risk-on areas, consumer staples, utilities. That's sarcasm, by the way, if you're not familiar with it, because obviously your consumer staples and your utilities are, some of the more risk-off areas of the market. But those are the ones that are showing strength right now. And those are the only areas besides the banks, which have been kind of interesting, because they have been showing strength quite a bit. And over the last month or so, but in relation to everything else, right? Not just the what's been going on in the price action itself, but that's it. And you still have even though the semis, we could look at, so this is just moving averages. It's not looking at any of what I tend to look at, volume at price, and that's why we kind of examine further. But here's what the semis look like, and it won't take much for them to reclaim them, but currently they're just exhibiting relative weakness, which is by how those short-term moving averages tend to kind of put things. And I think what also helps when you look at something like this is, first of all, it gives you a nice snapshot, so you could quickly interpret the data of what's weak and what's strong. But it also kind of keeps you objective, right? Because I know that a lot of retail traders who want to focus on growth stocks, right? I mean, some of the growth areas, like look at software is another one that's below all these, moving averages as well. So it's just not there yet. And the other thing is that's going to be kind of interesting here in the days to come, if the market continues to progress, is like what areas are first besides the staples and utilities are going to start retaking some of those moving averages. I think healthcare has been kind of interesting. Not that I want to own all the names in healthcare, but we've certainly seen some interesting reports. And the first one that I'll start with, and then I want to go over the China names. But of course, this always gives me the wrong thing here. Is Transmedics, and I actually bought some of this today. Just because I think that this is going to show some continuation, and it certainly did. The stock was up nicely. I think it says up 5.8%. So I even was able to take a target in this one, even though I just put on a starter position. And by the way, I think it's really important, if if you haven't heard this today or recently, I continue to kind of participate with this market, even though I don't like where the indices are situated. And how I kind of handle that is I make adjustments. I'll reduce the size of my positions. This way I'm still, going through the motions and going after setups that I like, but I'm just recognizing that the overall market is not on a strong footing yet, right? We want to see a nice defined trend again, right? So like, again, we could look at the Qs. It doesn't matter which index that we look at, but yeah, I mean, we want to see this back regain its its trend, right? Below the 50-day moving average is a position of weakness, right? Just by definition alone, right? So and again, what I'm looking at too is this is more looking at the short term, medium term, right? Long term, right, is a completely different picture, right? So if you think like, hey, what's he talking about? Why is he talking about these short term moving averages? On the weekly chart, right, the trend is still intact and we're still above that value area for the year. So the longer the time frame you have, like these dips that we're getting, they may be buying opportunities for you, right? And you could of course execute things differently in your longer term accounts than you do in your trading accounts. Longer term accounts, you could be buying the dip no problem, because the dips are really good for doing that. So if you have an IRA, 401k, you could be adding to that more aggressively when this is going on. All right, so let's so TMDX was definitely a name that I was focused on today, is a name that I wanted to at least get involved in. A couple of the retail names, I'll just kind of go over a couple names that have been on my strong earnings list, which we now have a list of, I think, just about over 50 names at this point on our earnings strength list. But again, probably not on the top of everybody's list, but Levi's made a nice move today. Abercrombie and Fitch is kind of looking interesting to me. Again, I don't have a position in any of these. These are just like on my watch list. Abercrombie got back above its 50-day moving average today. Also Costco, which I do have a position in, both in my TTG trend portfolio, which is more for longer term swing trades, right? So this retook its 50-day moving average. So I think like this is a must watch for me. Took out a VPOC here, so we'll have to keep going. Also right at that 50-day moving average, but I would love for this to get back above this range. Costco is one of my favorite companies. All right, so let's talk about the China names, and I'll kind of give you my perspective on the Chinese names. Here's let's first look at the weekly chart here for a second. So, if you feel like you missed this move, right? I would say number one, like depending on what type of a trader you are and depending on what you're expecting, but really this hasn't done anything. I get it. It's made a huge move the last 2 days or the last 2 weeks, right? This is a really nice move. But if you want some confirmation first, like for like a longer term trade, and it's nice to catch these quick trades, but the trend may just be kind of starting to reverse here. So the way that I look at this is on this weekly chart is look at how slim the value area is, right? That does usually mean that a decent move is coming. So I would watch this 29.67 And then you have a nice easy level to trade against, provided that we have one more day in the trading week. So I'm kind of cheating and looking at the weekly chart, even though we're still going to get more information. We've got one more day, but yeah, I mean, look at the base, see if this can get out of this base. And again, this value area is based on all of last year's activity, right? And it was super bunched up last year. So, this move could just be beginning, right? And you need to see something first, in my opinion, right? I've been seeing folks on Twitter, God bless their hearts, for the last like 4 months talk about how great a China trade is. I don't have time to sit in a trade for 4 months before it starts to work. You're kidding me, right? And then like every time one of these, every time like KWEB went up like 2%, they were talking they were doing backflips. I'm like, what are you looking at? It has it, in terms of like putting on like a bigger trade for a bigger move, it's just starting to trigger it now. All right. So that's my thought on that. How did I trade this? I always go to the best in the breed, right? And that was the PDD. PDD was one of the few China names that were in an uptrend, right? What's the definition of what's the difference between an uptrend and a downtrend? A downtrend indicates weakness. An uptrend indicates strength. Notice what this name did today, right? It had a huge day today. I think it was up 11% today. And so that was the biggest name, that was the biggest gainer, right? Now that's not always how it works, but the fact that if a whole group of stocks, right, is in a downtrend and there's one or two stocks that are in an uptrend, doesn't that tell you something about the one or two stocks? That those are the stronger names, right? You don't want to mess with the weakest names, right? You want to stick to the ones that were actually showing that relative strength. Don't you want to own something strong versus the weakest thing, right? And I always use like football analogies, right? Do you want to put like, so if you've got Tom Brady, right? Let's go back 10 years, right? When he was more like in his prime, right? Do you want to, if you've got Tom Brady, right, on your team, right? Are you going to, and it's the playoffs, right? Are you going to keep Tom Brady in the game, or are you going to put him in for your third string quarterback because he's the worst on the team and has the biggest chance for like upside potential, like because like if that's what you're thinking about for a name at a downtrend, right? So you're going to bench Tom Brady because he's been strong and he's been doing well for so long. That doesn't mean he's going to keep going, right? So that's not exactly the same thing as stocks, but it's the way you want to put your best players on the field. So that's why I went long PDD because it has been exhibiting relative strength for a while now, and really had a nice day today. So I did take some profits into today's move. I also I actually caught this last week, and then I added to it a little bit. I added back some of the profits that I took, just because I didn't think that the move was done, and I didn't think that the move in China was done. I want to take a look at a couple other things too, because of course China is going to get to all the headlines. But I also like this VWO ETF. Now, there is a difference between VWO and EEM. And I think the difference is South Korea. I think VWO includes South Korea and EEM does not. And I actually like South Korea a little bit better. I like some of the companies that are in there. I think Samsung is in South Korea, and I think I think Kia's in there too, Hyundai. If I'm wrong about that, just let me know. But regardless, like take a look at the weekly chart here in VWO, right? And I am long this in the TTG trend portfolio, but this is the highest level since all the way back in here, right? Look at it, kind of, it made a nice little dip here and continued higher. So I think this is pretty interesting in terms of emerging markets. Now, if we go back to just the performance for the day, what's helping a little bit. Look at what the dollar did today. I even put this in green, even though it's a down move, because it's good for stocks when the dollar goes down like this. So just looking at this, and I'm gonna look at right. So these things go hand in hand. So here's DXY. Right, and we'll just look at the daily chart of the dollar. Right, because you do have currency exposure. The same thing for the KWEB, right? Any of the international ETFs, unless they specifically say it, you are essentially short the dollar, right? So you need the dollar to work with you, right? I'm going to say that again in case you're not familiar. If you're trading EEM, VWO, KWEB, FXI, right? You are essentially synthetically short the dollar. Why is that? Because they're holding local securities, right? Unless it's holding all ADRs, you are holding local securities. So, and you're doing that in the other in a different currency. So again, you're synthetically long those currencies versus the dollar. All right, so this is pretty good. This was yesterday, and this was kind of a rejection of those previous highs, and the dollar's supposed to be starting to lean lower. Again, that will be good for owning international areas of the market. All right, a couple other things that I thought were just a couple plays that again, all starter positions for me this week. But Spotify, I liked how this name has been acting over the last, couple weeks. It had a kind of Fugazi type move there on a very technical term there on earnings, and it kind of came back in, but rested and found support at the 50-day moving average. So I like this. As always, you have to have some patience. App loving still has a little bit more to go, but notice, by the way, the VPOC takeouts here signaled the high, and starting to kind of build back up a little bit. So that's another name that I'm watching. I'm going to end the video here for tonight. Guys, have a great night. And if you want further analysis, I put out all of my new trades. I put them in our midday note. So make sure that you're signed up for that on Substack. Again, you do have to subscribe to it. But you get a wealth of information, as well as if you want to be a member of Tribeca Trade Group, you can kind of watch how I manage these trades as the day progresses. Have a great night, everybody. See you tomorrow.